Okay, that's silver. That's the daily. I just mentioned before that I was looking at some major gold producers that indicating, the chart is indicating actually that it will be wrong to give up on the bull. And I would say that I maintain this view even when I look here at silver. Yes, I think it will be premature to give up on the bull. It is really testing our nerves. Yes, it is requiring a lot of patience here. But the pattern that I outlined here some weeks ago that could work out as an ABCDE, this pattern is intact. Yes, it is intact, and we do not have any technical ground to dump silver and say the bull is dead. It's just not right. If we are sticking to a certain method, then we have to stick by the principles. We are saying we have a critical level here at running at just under 18, the black line. Then it's still there, and it has not been tested. The market did not crash through. It is still oscillating around here, and I told you we're going to have to sit through a lengthy sideways price action, and it appears to be doing just that. So let's continue with this pattern because it is still okay. I'm taking this as the end of the previous move, impasse wave, and that is beginning correction of an ABC. That's an ABC. We took this as an A. That's a B. Coming down, I suspect that we have an ABC, X, ABC. I'll show you in a sec when we see the 60 minutes. And my thinking is that it should stop. If there is a further drop here, it should stop at around the 1850 or so. Yes, not even test my blue line significantly and then gradually come back up. It's not going to be something like that. I don't think so, but could definitely be something like that. Okay, going back to the vicinity of 20. The blue line that you see here is very significant. Okay, if it does manage to run above this level, it is almost certainly suggesting that it's ready to run quite a lot higher than that. It will suggest that perhaps the fourth wave might have ended here. But let's not jump the gun. Let's take it step by step. We are saying that we think that's an A, that's a B, that's a C. We're expecting it to hold ground here and to continue higher and perhaps not climb much above 20, but continue sideways here. This stretch of going down here took about 2 weeks. The one that preceded it also took about 2 weeks. Do you see what I'm talking about? Maybe another 3-4 weeks we have to hang around here until it's ready to take off. Now let's go and see the 60 minutes. There are quite a few possible ways to subdivide a price action that starts from here. And what I'm showing you now is only one option. Okay, we could spend 2-3 hours discussing all the possible options, but I'm just going for the one that is, if you like, the simplest, or if you like, jumps off the screen at me. It seems to me that that could work out as an A, B, 1, 2, 3, 4, 5, that's C. That's an A, B, C, D, E, that's an X, okay, an X, and that's coming down, that's your A, that's your B, coming down, 1, 2, 3, 4, 5, yes, a tiny drop, tiny drop under 18.6, like that, and that will terminate the ABC, X, ABC, and that's where I expect the market to find support and gradually make its way higher into possibly another set of A, B, C, X, etc. Okay, so that's the issue with silver. Now, this is gold, that's the monthly. I just want to highlight here the tough resistance that gold is now facing. First, the line that comes down here as the channel line. Second, horizontal resistance right here, and it's not surprising now that we can even talk about monthly scale stop for the rally that began right here. Well, you can see why. Yes, there is something right there on the chart that goes back years that is stopping the rally. But as I just told you, I think it will be way too soon to conclude that the bullish momentum that started here is over and it is heading a lot lower. I think it will be a mistake. Yes, I think it will be a mistake. I think that we should definitely keep the bullish option as the likely option at this point, even though the performance here on the weekly performance of gold price in US dollar has been nothing really inspiring for the bulls. It's super boring, but it's consolidating. What can I say? It is doing what you would expect a market to do after it run up spectacularly by a lot. By a lot, this is almost 30% run, what you see here, in relatively short period of time. And we're not seeing it completely giving up. All the price action that you see here is definitely corrective, and in itself is bullish, because correction is a counter trend move. I keep saying it. It's a counter trend move. So any correction that you see can help you to understand where the market is likely to go once the correction is over. And the market is likely to go up, because if this is counter trend move and it's heading lower, tilted lower, then when it's over, it's going to continue, yes, with the bull that we are seeing here. Now let's go and zoom into the daily. Before I do so, look at the support that is still holding, has not been breached. This is still there. We have quite a few things that are still playing in favor of the bulls here. There is no question. 1300 hasn't been tested this past week. It came down, and it looks like the drop is lessening. I mean, the velocity of the drop, if you like, the momentum of the drop is lessening, and it's reaching the support that's been there for weeks now to hold it and push it slightly higher, as it is basically churning, moving in place, yes, going sideways, consolidating. Okay, so this is the idea on the weekly, and we can still work with our 1-2 or 1-2. Some arguing that that is a third, yes, that you can't have failure in a third wave. If that's a third, you can see that it's not going to make a huge difference if you start counting from here. That is still in essence a corrective movement that is projecting further upside. Let's now take the daily. I will continue with this being the end of the fifth, but even if I start from here, the only thing that could, if you like, spring somewhat a surprise, if you start counting from here, it is possible that gold will do this the coming week. If it happens that it runs above this level, and this now is a short-term critical level for you to observe, it's just above 1350. I can give you the precise level if you just bear with me a sec. It's right here. It's 1352.61. The next one is 1352.58. So yeah, it's around there, 1352.50 or so. Okay, that's the point. It shouldn't go above this level. My idea is that if it goes above this level, it's probably telling us that the triangle is perhaps finished, meaning that it is possible that the DE actually ended here, meaning that we had to do this A, B, C, D, E. You see, go back two steps, because you start counting from here. That will become likely if it runs above this level. However, if it doesn't do that and it keeps staying away from the critical level of 1300 and it gives us something like that, then we know exactly where it's going. It is going on the path that we marked here as the fourth wave, and in due course, let's say in about 3-4 weeks, if we just go by the time scale that we have used up to now, 3-4 weeks, we should see it taking off about 1360. Let's have a look at the 60 minutes. And you will see that I avoided putting very short-term labelings here, as I think that we have absolutely a whole host of options possible here. Okay, again, I think that it's probably doing the same wave count I've shown you in silver. That's an A, that's a B, that's a C, that's an A, B, C, D, E, that will be your X. That's an A, that's a B, and that's the final C. Okay, I repeat, A, B, C, X, with this being A, B, C, D, E. That's your X. You start counting a new series of A, B, C. That's an A, that's a B, a tiny A, B, C, D, E. Okay, B, and then final draw. So yeah, effectively it could go down under 1305, stay away from 1300, come back, recover towards 1330, and everything is on track. Yes, I think that jumping back towards 1325, 1330 during the coming week, having left 1300 intact, will tell us yes, stability is back. It's just going along with the triangle idea. Now this is Barrick Gold Corporation. That's the weekly, again a major gold producer that ran down for many years, and we are looking at a pattern that is likely complete. I mean the pattern that started in 2008, with this being an A, that's a B, and that's an unbelievably low price for this major gold producer. That's 587. Okay, with this being 1, 2, 3, 4, 5, basically giving us a complete 5-wave run. Now, do you see the surge here? Do you see how impulsive it is? Do you see why I think it is likely to lead to much higher prices? Do you know why? Because when you look at the surge and you look that it's also likely composed of 5 legs, it doesn't look at all that it's part of the flow that began from here. How are you going to fit this with a pattern that started here? How? What is this? It just doesn't make sense, as it's not corrective. So how could you fit that? If that's 5 legs, the only way that you can fit it with something that started here is that will be a C. So what do? Is that an A, that's a B, that's a C? You won't tell me that this stock is going to go under 5.87? Doesn't make sense. And what that pattern is going to be if it's going like that? What is going to be? That's an A, B, C. What? Is that a 3-4 like that? Doesn't look likely. Do you see why I suspect that in fact this is a genuine long-term bottom? A genuine long-term bottom, and in fact what you see here is a first surge of a multi-year bull market in gold. I will now show you the daily, and you'll see why the wave count here is definitely supporting further upside. Just look, first of all, running from under 6 to almost 24, quadrupling in price in a relatively brief period of time. This is very impulsive. Very impulsive, I can say that again. And then when you look at the subdivisions, you count 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 5. That's 3. So you go 1, 2, 3, stretch, ending right here or here. It's not going to make a huge difference. Then you have your 4 and you have your 5. Okay, with a 1, 2, 3, 4, 5 right here. That's all in. That's 5 waves all in. Okay, and then the correction begins, and that looks like a perfect correction to me. That's an A, that's a B, plunge C, and the C could still be ongoing. I mean, that's 1, 2, 1, 2, 3, 4, 3, 4, plunge. Okay, look, A, B, C. If that's correct, and supposing that the second wave is done, then we could be ready for a third wave. So Barrick Gold Corporation, symbol ABX, for those who are not familiar with it, but anyone who is interested even mildly in the energy, in the mining sector, must have heard about Barrick Gold Corporation. That's where you start. You know, Barrick Gold Corporation, Kinross Gold, and all these giants, that's where you start with your interest, yes, developing your interest in the mining sector. So right here, we would see it running back to 23.46 and running a lot higher. I suggest we take another look at the weekly. And just look at this. That looks like a perfect surge, first leg, and that looks perfect correction. What's negative? That looks very positive to me. So it might need maybe another 2, 3, even 4 weeks. We're talking about a possible 4 weeks correction in the precious metals. Yeah, we might have to wait another 3-4 weeks for those markets to line up nicely to be ready to run up. Another 3-4 weeks, another 3-4 bars, as you see here on the weekly, would not damage by a bit the bullish potential here, especially if they stay above the 50%, the 14.6, as I'm showing you here. And that could turn out to be fabulous buying opportunity. So you get your 50% retracement. You buy some stuff here. You buy some stocks here. That's the 50. It'll come back. It'll come back to have the support of the 50. What used to be resistance on a number of occasions here. Study a bit this chart, and you will see how things are going to become clearer and clearer. Look here. Look here. 50, 50, and it might need to come and see that the 50 is changing roles, becoming support now, and then it will be ready to take it a lot higher. Now there is no doubt that if it clears this zone at around 22, 23, it's going to start running seriously. It's going to start running very seriously, and we could witness an absolute explosion here that will carry towards 40. That's the next serious zone is around 42 right here. There is some congestion, some difficulty around here, but this is more substantial, what you see here, this level. In short, I remain bull, and I don't see any reason to abandon the bullish camp.